As per Para 2 of the Schedule 1, supply of goods or services or both between related persons or distinct persons when made in course or furtherance of business, provided that gifts not exceeding rupees 50,000 in value in a financial year by an employer to an employee shall not be treated as supply of goods or services or both. Now let's understand this para. GST is a tax on supply, not just on sale for a price. Under CGST Act, supply includes certain transactions even if no consideration is involved with related persons or distinct persons. Why? If a father gives from his business stock his son an iPhone for free, why should GST apply? It's family, right? If related persons, example holding company and subsidiary, branch and head office, relatives, could transfer goods or services without GST just because no money changes hands, they could avoid tax on the final sale. Therefore, to essentially avoid this tax leakage on transactions between related parties and distinct persons made in course of furtherance of business, such transaction will be treated as deemed supplies and GST shall apply. Let's take some examples. Parent company gives raw material to subsidiary for free. Now subsidiary makes final product and sells. No tax on input stage. Government loses revenue. So law treats free supply to related persons as deemed supply to ensure input tax credit chain continues. However, it is relevant to note that when such transactions are made in course or furtherance of business, then only this rule will apply. That is, if there is no business connection, even related party transfer is not a supply. So, if a father gives his son a car for free for his personal use and not in course of business, no GST will apply. GST doesn't take personal gifts. It taxes business to business or business related flows. GST is a consumption tax on business activity. Personal transfers are outside its scope. The law intends to catch tax avoidance through business structures, not family charity, as without this it will be absurd, right? Like if a father gives son a toffee, then he will have to go and pay GST on it if this rule was not there. So now let's understand what are related persons first. Persons, including legal persons, are deemed as related person if such persons are officers, directors of one another's business. So let's suppose in this picture, Miss Emily Chen is the common director of Ultima Innovations as well as Globex Industries. So basically Ultima and Globex becomes related persons due to both the companies having a common director. Here officers and director words are used interchangeably. That means both are same. Now persons including legal persons are deemed as related persons if such persons are legally recognized partners. Like if partners of same firms are there, then they all are related persons. Such persons are employer and employee other than salary and except for an amount up to rupees 50,000. So here is where it gets tricky for HR departments and business owners. Employees are legally defined as related persons to their employers. But note, what employees giving in return for a salary is neither supply of goods or supply of services as per Schedule 3 of the CGST Act. Salary means CTC or a cost to company. Let's say a pay package, which is agreed between an employer and employee via a contract. So anything which is a part of salary is neither goods or services. So it is outside the scope of GST. Can employer give employee anything other than salary? Yes, it can be possible. Let's take some examples. Like a loan guarantee provided by employee to a bank for his employer to help him get a loan from the bank. Still, if he does not get any consideration in return for that effort, GST will apply on such effort. Does that mean every time you give a laptop or a bonus to a staff member, you pay GST? Thankfully, the government threw us a small bone here. There is a specific provision. Gifts up to rupees 50,000 rupees in value per financial year from an employer to an employee are exempt. So if you give your top manager an iPhone worth 45,000 rupees as the Diwali gift, you are safe and there is no GST. But if that phone is worth 60,000 rupees, the entire exemption is blown and it triggers a GST liability under Schedule 1 because it's a free supply to a related person. This applies to genuine gifts outside the employment contract. Regular salary and contractual perks are completely outside GST. Related persons also include one of them controls directly or indirectly the other. So as per the example, if A Limited controls B Limited, both these companies are related persons. Then related person also includes a third person who controls, owns or holds directly or indirectly more than or equal to 25% of voting stock shares of both of them. So now let's suppose C Limited, which owns more than 25% of the shares of A Limited and B Limited. Then A Limited and B Limited will also become related persons. Now other example of related persons are a third person controls directly, indirectly both of them. So as per the example, if C Limited controls both A Limited and B Limited, both these companies will also be related persons. Note, A Limited and C Limited and B Limited and C Limited are related persons already as per the above clause. That is, one of them controls directly or indirectly the other. The other example is such persons together control directly or indirectly a third person. Now let's suppose a vice versa situation happens where both A Limited and B Limited now controls a third person, that is C Limited. Then by this virtue also they will become related persons. Now another example is such persons are members of the same family. As per the definition provided, family means 1. The spouse and children of the person, and 2. The parents, grandparents, brothers and sisters of the person if they are wholly or mainly dependent on that said person. Now let's say you own a graphic design agency and your brother owns a restaurant. Your agency designs a brand new menu, website and logo for his restaurant. Because he's your brother, you do it as a favor. 0 rupees will be charged by you because you are related persons. And this was done in the course of business. Schedule 1 will kick in. You have to calculate the fair market value of those design services, create a dummy invoice and pay GST on it. The tax department views it as a taxable supply even if your bank account says 0. Now another examples, one of them is the sole agent, sole distributor, sole concessionaire of the other. So let's understand what does this mean. In business and law, a sole agent is an individual or a company appointed by a principal to be the only person authorized to represent them or sell their products within a specific geographic area or market. So they are also related persons and any supply between them without consideration will be subject to GST. Now let's understand what does the law mean by distinct persons. In GST, registrations are state specific. Imagine you run a thriving clothing brand. You have your main head office registered in Mumbai, Maharashtra. But business is booming, so you need a brand new retail outlet in Delhi. Because they are in different states, they must have separate GST numbers, even though they belong in the exact same company and under one PAN card. The law treats your Mumbai office and your Delhi branch as distinct persons. They are legally separate entities for GST purposes. So when your Mumbai head office ships a truckload of inventory to Delhi branch to be sold, guess what? The internal transfer is treated exactly like a sale to an outsider. No money changed hands, but because it's between distinct persons, you must generate a GST invoice and pay tax on that transfer. Now let's suppose I have opened a separate tailoring business in Mumbai as well. Now in the same state, I have opened another business under the same PAN card. Now you can tell me what is the mandatory registration requirement here. For each state, one registration is mandatory if on the same PAN, irrespective of the number of businesses one holds in that state. But I can also take more than one GST registration in each state as well, depending on the number of businesses I have in each state and the number of places of businesses I have in each state. So if you have separate GST registration number for each place of business within a same state and send goods from one place to another, Such stock movement will also attract GST, as establishments of a person with separate GST registration within same state, then also any stock movement within the same state will also attract GST, as they will be treated as a distinct persons. The advantage of treating stock transfer between distinct persons as a supply. First of all, let's understand the term self-supplies. It is basically the transfer of stock within the same business. Now, the transferor unit would not charge any amount to the transferee unit. Similarly, it can also be possible that one branch supplies services to another branch of the same entity without any consideration. So, what is the self-supply confusion? Normally, GST applies when you sell to a customer. But Schedule 1 says, even if you transfer goods or services to yourself or your other branch or offices having separate GSTIN, that is GST registration number, without any bill or payment, it is still a supply. Now, if I send goods from Delhi to UP branch in this example and say I am into a clothing business, is it a sale? No, but GST calls it as a supply. Why? And many will think it will increase the tax burden. But today, let me show you, there is an advantage that such a supply is there and it is treated as a sale and GST has to be paid. What is the real advantage? The real advantage is the input tax credit flow. Now let's suppose the raw materials were purchased at the Delhi branch on which it incurred state GST, that is Delhi GST, and CGST. If the tax rate is, let's say, 18%, and this input tax credit is sitting in Delhi branch's books. Now, Delhi branch transfers to UP branch without any invoice and without any consideration, let's suppose. Now, UP branch is the one who sells those goods locally and pays output CGST and SGST to the UP government. So, in this case, you will see that input tax credit flow will be blocked. In this case, no ITC would have been available to the recipient branch, here UP, as input tax credit would be stuck in sending branch, that is Delhi. However, if the Delhi branch makes a sale to UP branch and charges IGST on that sale, this input tax credit can be used to pay CGST and UP GST for that UP sales. The result will be no loss of tax. So, if a stock transfer were not supply, the sending branch would pay tax, but the receiving branch can't claim input tax credit. That's real tax waste. So, GST explicitly removes it. Now, let's discuss some examples based on this para of Schedule 1. First example, stock transfer from Delhi to Mumbai branch, both registered without consideration. Will it be termed as deemed supply and GST be payable? Yes. Why? Because they are distinct persons. Second, service from parent company to subsidiary without consideration. Will it be a deemed supply and GST be applicable? Yes, because they are related persons. Then third, father gifting son motor car for personal use. Will it be subject to GST? No, because it is not in the course of business. That is also an important criteria for this para. Now, father gifting son an iPhone from business stock. Will it be termed as a deemed supply and GST be payable? Yes, because again they are related persons, but the transfer is done in the course of business. Now, Diwali gift from employer to employee below rupees 50,000. Then in this case, whether it will be a deemed supply and GST be applicable? No, because the proviso says any value up to rupees 50,000 in a financial year between employer and employee will not be treated as a goods or a services. So this GST will not apply in this case as well. We will discuss the other paras of Schedule 1 in ensuing videos. Please like, share and subscribe if you found this video useful. Thank you for watching.